Hi everyone, Josh Guest here. It's been a rough few months for financial markets. Inflation in the United States and around the world has been significantly higher than usual, and that trend is accelerating as time goes on. Couple that with actions being taken by the central bank in charge of the world's reserve currency, the Fed, which is attempting to combat rising inflation by hiking the base interest rate on which a significant portion of the world economy operates. The result? Stocks are down, real estate markets are cooling, crypto assets are tanking, and Bitcoin is struggling to regain its bull market. But wait, isn't Bitcoin supposed to be the quintessential inflation hedge? Isn't Bitcoin's hard cap of 21 million coins supposed to push its exchange rate against weak fiat currencies ever upwards? Bitcoin maximalists like me have been preaching about Bitcoin's resistance to inflation for quite some time. So why is Bitcoin not outperforming during this period of extreme inflationary pressures? Why is Bitcoin seemingly following the same trends as the rest of the market? The answer is that there's more to it than meets the eye. Number one, Bitcoin is used for speculation. We spoke a couple weeks ago about how Bitcoin is money and that treating it like a speculative investment is the wrong way to go about interacting with Bitcoin. But even though I strongly believe that Bitcoin isn't supposed to be used for speculation, that doesn't change the fact that a ton of people treat it like a speculative money making investment. To a certain degree, the fact that a lot of people approach Bitcoin with that frame of mind is understandable. Our societies have operated for decades on weak fiat monies that lose a portion of their value every year to inflation. In no small way, fiat currencies have trained us to believe that we need to be financial analysts and asset managers just to scrape together enough wealth to have some sort of retirement when we're old. So does it make sense that a lot of people would approach Bitcoin with the same mentality of making money that has been ingrained in their psyche in every other financial market out there? Yes, it does. The reality is, though, that the vast majority of us aren't financial analysts or asset managers, and even some people who are still aren't actually very good at investing. In short, if someone is simply speculating with their life savings or their latest paycheck in the hopes of eventually trading in their Bitcoin for more fiat than they had before, they're going to get spooked when the Bitcoin exchange rate goes down and sell out as fast as possible. So why does Bitcoin tend to follow other asset classes downwards when times are hard? In part, it's because speculators are getting shaken out of Bitcoin just like they're getting shaken out of other financial markets. Number two, Bitcoin is used for risk management. Even though Bitcoin is the most perfect money humanity has ever had, not everyone sees it that way. A lot of people and companies use it for speculation, but some also use it for the purposes of risk management. Are you not sure what that means? Well, since most of us are terrible financial analysts and asset managers, an investing mantra has been developed around the concept of diversification. In other words, we're told to take our money and spread it around as many asset classes as possible in the hope that not all of them will tank at the same time. Take hedge funds and corporations, for example, which are usually obligated to follow regulatory requirements or restrictive covenants that force them to manage their portfolios in a certain way, such as liquidating an asset when its price rises or falls by a certain percentage, or when another asset in their risk managed portfolio does. They're not treating Bitcoin like money. They're treating it like one small piece in a wide ranging financial strategy and will happily cut their Bitcoin holdings loose if they feel like it. And since companies are often some of the largest Bitcoin holders, their liquidations can add severe downward pressure to exchange rates. Bitcoin's status as an inflation hedge is largely aspirational at this point, and a large portion of its user base just isn't committed yet to using Bitcoin as money and holding on to it through the good times and the bad. But the number of users who do believe in Bitcoin as inflation resistant money is growing day by day. I find myself in the latter group. Do you?